Now, moving from crude oil, let's actually talk to another guest, Parthamesh Mallya, Chief Analyst in Non-Agri Commodities and Currencies at Angel Broking. He joins us on the show from Mumbai. Parthamesh, first question to you would be, let me ask you, what could be the strategy for the crude oil at present, and also do you believe that at present the buying momentum is actually turning strong? Because what we have seen that there was a period of few sessions where the crude oil prices, they were correcting, but then in the last two sessions we have seen some sort of recovery happening.
Yes, Piyush, I think the momentum would still continue to be on the buying side in the Indian markets as such. 3,800 is what we're looking at possibly in 2 to 3 trading sessions. But I would also advise a word of caution here because 57, 58 is what WTI is trading at. So technically, possible we might see some correction towards $55. So that's a correction of $3 from the current levels. Yes, buying momentum remains strong, but then you need to have word of caution here. And trade according to the volatilities.
So in terms of strategy for the MCX, like what you would be advising in terms of stop loss, and what should be the ideal targets here?
3750 is what it's currently trading at. I think buying on dips should be advisable. 3730 would be the entry point and possible stop of 3680, target higher towards 3800.
Okay, and secondly, around the precious metals here. Now, on one side, as you were just highlighting, that crude oil perhaps is providing a good sort of buy on dip strategy here. Now, gold, silver, we have seen very range-bound trading in terms of dollar gold in the global markets here. How do you see in terms of the MCX gold, MCX silver, what should be the trend at present? And also, do you believe that there is some sort of trade between the gold and silver also?
I think the precious metal is stuck in quite a dilemmatic situation wherein we are quite near to the rate hike which would possibly happen in December, wherein markets are pricing almost 97-100% chance. But then on the other hand, you also look at spate of economic data coming from US, which does not bring out a good sign about the possible economic indicators. So it is quite stuck in these two contrasting factors, and hence you can see the options that is introduced on MCX is not really picking up because of low volatility or neither directionless in gold and silver. But just for the trade per se, we would advise buy on gold as well as sell on gold as well as silver. For gold, December contract would be 29,500 would be the entry point. 29,650 would be the stop. Target lower towards 29,300 followed by 29,200. While as far as silver goes, again, December contract sell 39,500 entry point, 39,800 stop loss, target lower towards 39,000.
Right, so sell strategy on both silver and gold, which means precious metals are not looking bullish at present, they are looking bearish. Parthamesh, again on the base metals, we have seen in the last two sessions, almost three sessions, there has been some sort of recovery in the zinc price, in the copper price. Aluminum basically has been a one day basically, but broadly copper and zinc have been outperforming. What's the trade here, and also what's your own assessment why actually metal prices they have started increasing again?
I think metal prices have all the metals. You talk about lead, zinc, nickel, copper, aluminum. All the metals have had a good rally for most of this year, and we are in possibly by the end of the year we would see this rally. We are fading soon. We would see some correction in almost all the counters, but then take into consideration China factor wherein aluminum smelting capacities are off. So in that sense, I am very bullish in copper. So any dips in aluminum, it would be buying opportunities. 134, 135 is what currently trading at. I think the possible momentum would be on the higher side towards 140 followed by 142. But if you want me to pick a trade in almost all the base metals, I think the best bet would be placed on copper. 440. 450 it is what current trading at. I think this would be a buying entry point for target higher towards 460. The stock would be 444.
Right. So while you're picking out copper here, Parthamesh, tell me one fact here that what we have seen in the Asian exchanges also, nickel and other base metals, they have been trading higher, but then we know that the US markets basically are shut. Then that also implies that basically you're going to look towards again Asian exchanges only in terms of Qs tomorrow. Do you believe that could perhaps push the volumes lower, or there could be some aberration in trading today, or primarily you believe that the trends actually looks quite strong with respect to what is happening in the Asian trade?
I think you would possibly have to wait for that today because volumes would be low, Thanksgiving holiday in the US. But then you have to see the trade that would open tomorrow. But in whatever sense, I would possibly avoid nickel because it is quite volatile. Any entry points would make you at risk, whether it be buy, whether it be sell. The best pick in the entire metals pack would be copper, again buy side. And if you want to really place a trade on any of the one commodities, it would be crude and nothing else, possibly be on the buy side.
Thanks a lot, Prathamesh, for all the calls. I'm just doing a recap here. On the crude, again, Prathamesh has a buy call here. On the gold and silver, again, there are sell calls strategies here. And also on copper, basically, is what Prathamesh was recommending. It's a good time to go long. So again, those are the 4 strategies or the 4 areas where perhaps, again, here are the strategies which are just a recap for you. Oil, again, basically a buy here. Stop loss again 3680, and then again gold, silver are basically sell calls here. And then lastly, in terms of copper also, basically that was a buy call. So again, 4 areas where you could be focusing in terms of where the trade could be. Now for us, now it's a time to slip into a quick break.